Off the telephone line we go right now. Brian Hoops with us, Midwest Market Solutions, and we're talking markets with Brian. Brian, we have a big report coming up on Monday that everyone's kind of been looking forward to, but the soybean market seems to have picked up some steam today. What seems to be pushing beans higher?
Yeah, good to see beans moving higher, Bob. Wheat has dragged corn lower, and we've hit some new lows in the corn market, new contract lows in the wheat, but the soybeans have held technical support and have really bounced, and they've about 20 cents off of the lows or so that we posted just yesterday. So good bounce in soybeans. We've had a couple private sales this week. Maybe not a customer you normally associate with us, but they've bought 120,000 metric tons the other day and 225,000 this morning. So the demand is still there for the U.S. product, and part of that comes from the fact that Argentina's progress, as far as their harvest goes, is way behind normal. So we're quite a bit behind where we'd normally be this time of year. They're only about 45% done with their harvest. Normally they should be about 62%. So that's for some of these other countries to come back to the United States, such as Pakistan, maybe some other countries as well, and buy some soybeans. And that's actually supported the soy complex. Plus, we just haven't had much in the way of fun selling. They seem to be more interested in selling the wheat and selling the corn, and so far they've stayed away from selling the soybean market.
Well, soybeans, and we have talked about Brazil and their harvest progress. Now, you pointed out Argentina, and Brazil's about wrapped up, but Argentina apparently is falling a little bit behind, and that makes the American soybean look a little bit more, enticing that's on the market right now. So as far as this report coming up on Monday, Brian, what are you thinking about?
So there are probably not going to be a lot of changes for soybean balance sheets compared to a month ago. Trade is looking for 5 to 7 million bushels less ending stocks, and wheat's pretty much unchanged. It's the corn where we think we could see some movement as far as ending stocks goes. Trade is expecting about 30 to 35 million bushel reduction because the exports have been so strong recently. Last month, USDA increased corn exports by 100 million bushels, and that really isn't enough. They could increase it another 100 million this month and still maybe be falling short. So I really look for the USDA to increase corn exports by at least 50, maybe 75 or 100 if they want to be a little bit more aggressive, and that's going to tighten up our balance sheets. Last month we were at 1.465 billion bushels. We could be looking at a 1.4 billion bushel balance sheet, which raises the question, why has corn fallen 60 cents off its highs since April or mid-April, and why are we not finding much support for that market? And it's a valid question because our exports have been very strong. We're feeding a lot of product, and you can see the hog weights and steer weights are much heavier than a year ago, and we're certainly using a lot for ethanol. So there's a lot of demand for corn, and just to show you, the USDA a year ago in this report, they were projecting this year's ending stocks to be over 2.1 billion bushels, and now they're probably closer to 1.4 billion, will be announced on Monday. So they were off by a long, long ways, and that is not just on production changes, it's on demand, that they really underestimated demand last year.
Now, you mentioned the question, why haven't we, or why have we fallen, and do you think that maybe the ideal planting weather is kind of hanging over the market as well?
I think that's a big part of it. We've seen really good growing conditions, so we expect December would fall off of that news, but what was unexpected was July would fall much more than corn, or December corn, I should say. We saw July and December spread between the two. It was trading in the 30 to 35 cent range in most of the month of April, and now it's only about a 6 cent difference between July and December. Mm-hmm. We would have thought, December would have lost a lot of ground because of the good growing conditions, whereas July maybe wouldn't lose quite as much because of the strong export business. But I think it really turns back to the fun selling that's started in the wheat market and spilled over into corn.
Well, we're going to let you go for an hour and 10 minutes and maybe get some projections moving forward. In the meantime, how can we find out more about Midwest Market Solutions?
Yeah, we invite you to look at our website, which is MidwestMarketSolutions.com. Or you can give me a call directly, 417-501-5132.
We are speaking farm right now with Brian Hoops, Midwest Market Solutions. Brian, we have a big report coming up on Monday. What do you expect to see? Because we're being told that it could be a market mover.
Well, I think it probably will be. At least we hope it is, especially for corn, as we've really fallen in the last month or so in the corn market. We expect the USDA is going to cut ending stocks by about 30 million bushels, and I think it could be more. If there's a surprise, I think it's a bigger cut than 30 million as they increase exports more than that. So trade guess is about 1.433 billion bushels of corn carryout. That's a far cry from what they were predicting a year ago before the growing season at about 2.1 billion bushels. And ironically, that's about what they're predicting for this year's crop. We're going to produce a 15.8 billion bushel crop, but ending stocks could tighten to be around 2 billion bushels or just over that amount. So USDA really missed on their exports, really missed on their overall usage of the corn product in the last 12 months, and I think they're still underperforming here as far as their expectations versus what the corn market has done as far as usage and that sort of thing. Now, well, of course, we go into the weekend, and I don't know that anybody wants to be real heavily short going into the weekend, especially with President Trump seemingly talking about lowering tariffs against China, and he may end up doing that at some point. The other day he said he wasn't going to. This morning it was maybe 80% would be more of a realistic figure instead of 145% tariff. So a lot of moving pieces that traders have to deal with.
Well, another thing too, in the back of my mind anyway, is we are experiencing some pretty good planting weather, and that may limit our acres on prevent plant. What do you think?
Yeah, absolutely. Usually we get some areas, a lot of times these are the fringe states that will do the prevent plant, maybe they get in a little bit later. But it looks like, the 80s and 90s next week for a lot of the Dakotas. So in North Dakota, Minnesota, South Dakota, they should be running pretty aggressively because they are going to have good planting conditions. And so I think that crop gets in the ground at a very rapid pace, at least last year's pace, or at least at the normal pace, and that's what we're seeing. That means we're probably going to see more corn acres. We won't have an update to that till the end of the June acreage report, but we do expect to see more corn acres when it's all said and done.
Got about 30 seconds left here. I want to ask you, have we peaked in the cattle market yet, or do you still see some upward movement?
Well, we don't have any real evidence that we're peaking in that market yet. I think the market will probably peak before we have the evidence, but I don't know that when that's going to happen. We're still trading cash sharply higher above the June futures, above the August futures. The June time frame is kind of what we're targeting for when the tightest supplies of cattle will hit. So May and June, and then maybe we can peak and start to work our way lower in the board, because we are pricing in some rich premiums, but the cash market, cash is king, and the cash markets are telling us prices are still going to have to move higher here in the near term.
Hey, Brian, folks want to talk markets with you. How can they do so?
Yeah, you can follow us on Twitter, Midwest Markets, Brian Hoops, for latest information, and go to our website, MidwestMarketSolutions.com, sign up for our daily newsletters, and give us a call at 417-501-5132.